Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm joined by Tessa Price, who's the CEO of UDC Finance. And welcome to interest.co.nz and thanks for joining us. Look, we've got a few things to chat about, but we'll kick off with UDC's 75th birthday. Now, it's a finance company that's 75 years old, so given what's happened in recent years in New Zealand, that in itself is worth celebrating. What are you guys doing?
Absolutely. Look, it's an incredibly proud moment for UDC and its staff. Many people probably don't know that we started in the height of the Great Depression. And this has really stood us in good stead for the future. We finance things like, the first mass-built motorboat, the Todd family group, and the first Hamilton jet. So we've really focused on industrial finance. A lot of the roads and hydro dams throughout New Zealand have UDC's name next to them because we've financed those projects. So from our perspective, it's really about getting out there, thanking the industries and our customers throughout New Zealand, for supporting UDC, but also for UDC's role in terms of supporting New Zealand over 75 years.
And I mean, obviously a lot of lessons have been learnt in those 75 years, which have no doubt held the company in good stead in the last few years. You obviously avoided the property financing that brought down a lot of other companies. I'm sure this is what you plan to continue doing as well?
Absolutely. We've really stuck, I think, to our knitting and the industries that we know well, and, asset finance, so whether that be in the car industry or transport and logistics or agriculture or construction. So we will continue to stick to that, and it's something that we know really well, we specialise in, and that's where we can actually add value back in, not only to our customers but also to the ANZ group, who we work very closely with.
And obviously last year you had strongest profit in 8 years, I think almost $38 million. How has that was the year to September, how has the new year been trading?
Yeah, absolutely. Our profit last year was 37.4, so the strongest in 8 years, which was outstanding. We've already done the first 6 months, and revenue, net profit after tax, return on equity are all stronger than last year, whether you look half on half. We're doing very well. Our cost to income ratio has also come down as we've got more efficiencies as well. And we've had a massive 29% drop in our loan impairment. So that's a really good sign. And then just recently as well, Standard & Poor's have just come out and reaffirmed our AA- credit rating, which is really pleasing for us.
Yep, which is obviously the same as your parent ANZ's rating.
Yep, absolutely. We still have to stand on our own 2 feet and actually go back in and tell them what we're doing to get that rating back. So, strong revenue. New lending is up 5.4%. So new lending's up not only in our car book but in commercial as well, which is a good sign. And
that 5.4%, that's so far in your 2013 year?
Yep, just the first 6 months. So a really good sign.
And sorry, where are you seeing that lending growth in particular? I mean, any areas that are really strong, and are there any that are still lagging a bit?
It's still patchy, so growth is still patchy. We're seeing it in car finance, so that's up 3%, commercial's up 6%. We're seeing that in transport. Construction is going well, and also agriculture is going well. So despite the drought, which we've been monitoring very carefully, our customers really have, learned and made sure that they've saved for the, the good times and the bad times, which is good to see.
And when you put your annual results out last year, you said that the sentiment out there, and I guess the optimism was really strong among your customers, the part of the economy you deal with, which is pretty broad. How's that going now? I mean, obviously we've seen a few things happen over the last few months.
It's still strong. So at our 75th anniversary, we had a lot of customers. There's the Ross Brothers and Matamata who do construction. And what they're saying to me now is they're less nervous. They've got more of a vision. There's contracts in the pipeline, so they're buying assets earlier. 6 months ago, we certainly were seeing people wait for the actual contract before they purchase. So we're hearing that across the board and across industries.
There's a good level of optimism in the broader economy.
Yes, there's positivity. Absolutely, there's growth out there.
And in terms of the competition on the lending side, where's that primarily coming from at the moment for you?
Competition comes from all quarters, so the banks are very active in asset finance.
Any in particular that are really pushing asset finance?
I'd say, BNZ's always a contender. We've got GE out there who is a strong player. So, we've got a healthy respect, and I think it's good to have a strong, healthy category.
And obviously you raise money through issuing debentures. How's that going at the moment? What sort of reinvestment rates are you getting?
Reinvestment rates are really good. So for March it was 73%. We had investment customers at our 75th party here in Auckland who'd been with us for a massive 55 years, which was really pleasing. And on the other side I had customers that had been with us for 40 years from Spiral Drillers. So we're still doing very well in investors, retaining them and growing that. We've got over 30,000 investors now who are supporting New Zealand Grow, so it's a really nice formula to have.
And in terms of competition on the investment side, I mean, who do you see as your main competitors now? Because, I mean, there's still a few other finance companies out there, but not too many.
Yep, we compete, with the banks as well, and we have to be competitive. But again, our customers have got their investments secured and it's first ranked and rated, which is great. And the other side of that is also they're investing directly into diversified assets and into New Zealand businesses, and they get a healthy return as well.
And the Reserve Bank has got a consultation document out at the moment on non-bank deposit taker regulatory regime. They're looking to sort of move it closer to the bank prudential regime. Do you have any particular issues or concerns around that?
No, look, we're looking at that in detail. Regulation is healthy, it's strong, it gives our investors confidence as well. We are an MBDT and we should remain that because we raise and we lend money. We have some exemptions in place, which means, more confidence for our investors because of our parent, ANZ, who's been with us for 33 years now. So it really is the best of both worlds. We've got New Zealand's largest, bank and New Zealand's largest finance company working together. So it's a really good formula for both UDC and ANZ customers alike, but we will be feeding back and looking quite closely at the regulation.
And one particular feature of it, which probably doesn't necessarily affect UDC, but they're called the non-bank deposit taker regulations, but the consultation paper appears to open the way for potentially bringing in, companies that don't raise their money from the public, i.e. don't take deposits, but are major lenders in this sector. Do you think there's a good reason for them to be brought into the non-bank deposit taker regime? I
must say I haven't looked at that in detail, but they are subject to regulation as well already, so they might be just trying to streamline it, but it's something that I'd have to look at.
So I guess in terms of the rest of the year, you must be sitting here today, you must be looking fairly optimistically in terms of UDC's performance and perhaps topping last year's ultimate profit result.
Yep, look, I'm really happy and pleased with the way things are tracking with our growth. It's very strong, especially in terms of revenue. I certainly think we can extend our reach and help our customers further as well. We're looking at technology at the moment as an enabler. I don't think it's the be-all, end-all, but UDC Live building on that and giving true mobility to our dealers, whether they're car or agriculture, and to UDC so we can process. We're bringing investments online this year as well, but we'll be sticking to asset finance, and we're really looking forward to supporting New Zealand into the next 75 years.
And in any particular other areas of where you might look to grow in the next few months?
Certainly, we've got an asset finance product that's very strong, and looking at the smaller business market and into that market would be very lucrative for us.
Well, thanks for that, Tessa. That's Tessa Price, who's the CEO of UDC Finance, and I'm Gareth Vaughan at interest.co.nz.